Ed Siddell is with us, Chief Investment Advisor and CEO at EGSI Financial. Thank you for being with us. How do you feel about a day where you see the Dow up 400 points, the S&P's at records? Short term, long term, how are you feeling?
Honestly, this is going to be long term. I think this is a continued start of good things to come down the road. With the trade deal with China, let's face it, that is probably the best trade deal in history. To have a $550 billion fund in which U.S. taxpayers get to receive 90% of the profits, creating thousands of jobs. I think this is just the beginning of what we're going to continue to see over the coming years.
So, I mean, at this point now, it really boosted sentiment to see this trade deal with Japan in particular. And I just was reading that President Trump will have some money to spend on this deal because Japan will be investing in the U.S. over $500 billion. Some of your thoughts on that deal, does that sound like good news? I mean, the market took it as good news.
Well, absolutely, because the trade deficit with Japan, we are their largest trading partner. So it was a win-win. If there was any doubt that Trump was a great negotiator, that has dispelled any doubts for sure, because it is going to create thousands of jobs here in the U.S. going forward. When you think about tariffs, again, it was all about reciprocity. Everyone kept talking about it was going to create a recession. But investors have remained resilient all the way through this. It has created over $100 billion in revenues so far. The CBO, which is they always undershoot the numbers. They're estimating $300 billion a year in tariffs and just over $3 trillion within the next 10 years. So I think this is a win for the Americans, for taxpayers.
And, there has been at least one report, I think it was the Financial Times, that said the U.S. and EU were getting closer to making a deal overall, and that could, in fact, be imminent, and that the deal mirrors that of the Tokyo framework. Would that be good news?
Absolutely, and that's my understanding as well. My understanding is it may be as good as the Japan deal. I've also heard Indonesia is next, and that's going to be either a close third or it could be second. So we're starting to see the chips fall exactly where everyone has been hoping that they would. And again, we're starting to see strong economic numbers coming through. And so the economy is heading in the right direction. So again, our outlook, we've been bullish since May, and actually since the beginning of this year. But we really think going forward, these next 18 months, a lot of people are concerned that they missed the uptick since April. I think this is just the beginning. I think we have a long way to go.
And now here, I saw you have Alphabet as a name that you like, and we're going to hear from Google Alphabet after the bell today. Tell me where you think this could be headed, and if it does pull back after this report, because sometimes you need a Goldilocks report or a beat to actually jump higher, is that an opportunity? Right now it's at $190. Is Alphabet a buy?
It is a buy. Even if they take a step back, I think it's a strong buy, especially as it relates to AI. Just like Fiserv, right? There's, again, the negative market reaction. When we see companies like that with strong balance sheets, these are great opportunities going forward. And then you have the other end of the spectrum. When you're looking at Microsoft, a lot of people believe that that's oversold. But again, we believe that there's a lot more room on the upside as well.
Let's talk about some of the other tech names that you like. You like tech. I mean, you're not stepping away from tech just yet. It's been the leader. You still like it. Tell me about some of the other names you like.
I really like Celestica. We thought, originally our original estimates were 160 a share. We think it's now going to be over 200. We think that still has a lot of room to move going forward. And on the other end of the spectrum, the banks, as these tariff deals hit going forward, deregulation starts to come into play. We think financials, they are severely undersold right now. So there's some great opportunities there as well going forward. And the biggest play for us, we still believe this, are small caps. They really have not gone forward as much as we thought so far, because there really hasn't been a strong revenue earnings so far. But again, as deregulation kicks in, they're going to increase, and just buying the index, the RUT going forward, the Russell, is really going to be a big play for us over the next couple of years.
Small caps, I mean, you might have to be patient because you've been patient for a decade. Play.
Well, we haven't really been in favor of small caps up until this year. We believe that the small caps going forward, because they have the biggest room, that is going to be a really good play going forward. But again, everything's based on risk. And as long as you're allocated properly, it's a great risk to take.
You also liked Microsoft. Was that in the notes? I think you liked that one.
Yep. We do. We believe, I know a lot of people think that it is oversold, but we think that there's way more room on the upside for Microsoft, especially with the AI situation, how they're playing the AI. We really like it. We think there's probably another 15, 20% move over the next 12 months.
Ed Siddell, CEO, Chief Investment Advisor at EGSI. Ed, great to see you always. Thank you so much. Appreciate it.